เจอเลยครับข้างหน้ายังว่างนะครับผมเลื่อนมานั่งข้างหน้าก็ได้นะฮะครับเจอเลยนะครับ Right. Welcome back to the open discussion on the sustainability investment time for benchmarking. It is a great pleasure to have you guys here, and also we have the many distinguished speakers that would discuss this issue on this stage. May I invite the first speaker, the one that you already met in the early this afternoon. She's a senior relationship manager responsible for developing RobecoSAM's index, business and managing institutional clients globally. Please welcome once again Kun Kathelijne, Marritt Alers, Regional Director from RobecoSAM AG. Our next speaker, she's the Principal Head of Asia, Responsible Investment at Mercer. She works very closely with the clients across Asia Pacific in the formulating strategies for integrating ESG issues into investment process. Please welcome Dr. Xinting, Principal and Head of Responsible Investment Asia from Mercer. Last but not least, she's now Senior Analyst with the MSCI ESG Research in Beijing, China, where she has a team of specialist analysts that research and rate companies on the ESG metrics. Please welcome Kun Emily Xu, Senior Analyst from MSCI ESG Research, MSCI. And once again, please give a big hand for distinguished speakers today. Thank you for you all to come today. Some would, come from far away from the another side of the world and would like to discuss, the sustainability investment themes today. Let me begin this session with the Kun Emily. And, what are the challenges of the listed companies or any companies that we are facing right now? And that's the reason why, we need to discuss the sustainability investment at the moment.
Hello. Swatika, everyone. I first of all just wanted to say thank you for having me on this panel. It's a great honor to be part of this process. I wanted to thank the Stock Exchange of Thailand and the Government Pension Fund in particular for hosting this event and showing leadership in this area. I think it's very significant, not just for Thailand, but for the region. In response to your question, what types of issues are companies facing? I think particularly in Asia, we have companies facing the entire spectrum of issues. The way that we think about issues is that what is currently measured on a balance sheet or a financial statement is not representative of the entire context of that company. And companies are actually relying on embedded value in the environment, in society, in certain governance structures in order to create their financial value. And so by benchmarking them, by creating indices, and by doing the ESG research and ratings that we're doing, we're trying to make it clearer what those areas of value and risk and opportunity are. So the types of issues that are very common in Asia, obviously, earlier my colleague put up an excellent slide that talked about different macro trends. all of these climate change, demographic change, the digitalization of assets, the development of online communications, these are mega trends which are materializing in Asia in many different ways.
So now currently the non-finance performance would getting more important in terms of measuring the actual value of the company, and because the companies are having a lot of risk that is some kind of to be the big change in the world as well. So that's why we need to discuss about sustainability investment, right?
That's right. I mean. Just to introduce what MSCI does, I think that provides important context. MSCI is one of the world's leading providers of investment decision-making tools and risk analysis tools. And so we serve, some of the largest institutional investors globally, and we've been working with institutions and investors in emerging markets to develop their capital markets. And we're one of the only, we are the only index provider that has an in-house ESG research team. And so what we have developed over time is several decades of index construction and maintenance expertise and methodology, a very robust methodology. And then because we have our ESG research team, what we're doing now is marrying the ESG research with the index methodology. And so what we're starting to see is increasing correlation between financial performance and certain environmental, social and governance issues. But it depends on the industry that the company is in, it depends on the country or regional context that the company is operating in, which ones correlate.
Right.
That point, because I've actually got some slides on that.
Sure.
Try to pronounce this word, swastika. I practiced yesterday with one of my friends, but probably didn't sound quite professional as Emily said. But anyway, it's great to be here. Maybe before I talk about slide, if I could quickly talk about where I'm coming from. I'm actually from Mercer's responsible investment team. We have 15 members globally. We work very closely with asset owners. We often talk about the supply chain. We have the asset owners on the top of the supply chain, and then investment managers in the middle, and then the companies, because I think especially I think in developed market, it's very common for asset owners, totally outsource their management function. So it's really more through investment management companies. But also, I guess in terms of my team, we have 15 members globally. We really just working on ESG issues. We are specialists on RI, and I'm actually based in Melbourne, but we call the Asia Pacific team. So we have 4 members in Melbourne and Sydney, and I probably have a more focused responsibility on Asia. I guess we seem to be a bit far away, but actually we're not, and we work very closely with our offices in Asia, like my colleague Gary Hawker, he's partner and director of consulting for growth markets, and he's based in Singapore, and he travels in the region quite extensively. He's just sitting down at the back row there. He's waving his hand to everyone, and also we have a Hong Kong office, Seoul office, and Beijing office. So I really work with them very closely to help our clients in this region. And also I think it sort of works with the Australian think they're well placed in the Asian century, at least location-wide, because it's only a few hours flight away, compared with if you're based in Europe or not to our colleague sitting next to me, but in the US. So this sort of a background of our team, but I really like to pick up Emily's point on whether ESG adding value. So I've actually got my slides number 1 and number 2, but I start with number 1. It's really I think as asset consultant, we've been around in this area for probably about 10 years. And, if you look at other asset consultants, first of all, they probably don't have a dedicated team. If they have, they don't have extensive coverage. They don't have a long history at us. So we have been fortunate to work with a lot of the asset owners and work with supranational organizations on a lot of leading edge research. One of them, and a couple showing here, one of them we worked with the United Nations Environmental Program Finance Initiative on actually to look at fundamentally, because everybody's saying ESG, you should do ESG because it's good for you, it's good for your performance, but the starting point actually to look at research in this space to look at whether it add value on ESG factors. So we actually started looking at academic research. So in the slide you can see that the one on the right-hand side is the one we collaborated with the UN, United Nations Environmental Program, and the one on the left-hand side is actually Mercer's own academic research. So these two research actually shows that in terms of the evidence, we totally, I think, looked at 36 academic research, and majority of them are actually academic research, but also there are a number of broker research, so it's sort of more industry related. And the actual result that actually, I think probably 20 of them actually shows a positive return, and 11 shows a neutral return of ESG factors with investment performance. And a certain, I think it's only a small number shows there might be a negative return with investment performance. So what it really shows, it shows that, well, from a investor's perspective, because I think with sovereign wealth fund, I think, most, sort of around in this region, it might not be, it's sort of different from when you look at from a superannuation point of view, because with superannuation funds, they have a very strong fiduciary duty to their members in terms of what they can do. So this really cleared the line of, in this space, at least if they do this, it wouldn't harm the investment return. So, if we're being conservative, we're not saying it's all positive, but, if everything else being equal, if you consider these risks in your portfolio, it actually won't harm your investment return. So which way you should go? So this is sort of where we're coming from. And the next slide I want to show is actually, I'll just show it's in this space, it actually never stops as well, because the market is going, you also can't stop the research. So this is some other people, Deutsche Bank has released a study back in 2012, it's pretty latest, and also Deloitte has done some research in the space looking at performance and ESG related issues. But we have also done some proprietary research for our clients. Unfortunately, we can't really share in here, but this is an ongoing space. People really wants to make sure the actual argument still holds.
Right. So do you actually see the increasing trend of the sustainability investment awareness around the world, especially in emerging markets as well as in Asia as well?
I think it's quite interesting. I think I get asked this question a lot because from the surface, I think the General Secretary for GPF, she talked about the United Nations principles for responsible investment. So from the surface, if you look at it, it's actually the signatories in this region is only GPF and the Korean National Pension Services. So it's only two, but from our experiences, also, Gary and the team, we work in the region, there are quite interesting trend coming out from the region. I think because of the Asian fund, sometimes it depends on, they might be more conservative in terms of how they want to disclose to the public, but they quite open with us because we're their consultants and we keep it private. And we've done some quite interesting projects, in fact, with one of the sovereign funds in this region to look at actually ESG contribution of their portfolio. So what we did actually It's actually two parts to it. It's a qualitative and a quantitative framework. So what we did actually, from the qualitative side, we look at all the indices available in the market, including the Dow Jones Sustainability Index and the MSCI ESG Research and others, actually to come up with a more tailored framework for our client. So we ended up, because I think in terms of the coverage, because they mainly focusing on their home market in terms of their portfolio, but in terms of the coverage, because I think the coverage is mainly focusing on, for MSCI, it's focusing on the MSCI emerging markets. So in terms of a single country, or with Dow Jones Sustainability Index, it's the same. In terms of single country focus, it might not have the extensive coverage as our client like to have. So, but our aim is not to build an index for them. Our aim is actually to look at ESG contribution. So we look at all the key indicators. We have sort of come up with a framework to look at the companies, to really giving them a sort of a rating on ESG, but also including all the government mandates in the process, like to rate that as well. So from that, we're actually trying to translate from the sort of qualitative process to a quantitative one, because they really like to know the portfolio, the contribution of the portfolio in the environmental, social, and governance, and also economic-wide. So what we've done is we are using a sort of a farmer-French sort of type of model as well, but adding another character as the ESG character portfolio, we call it, but it's a long-short portfolio. And then we came up with our client like to call it a magic number of the dollar value of how much the contribution of their portfolio can be attributed to ESG. But there are also other funds apart from this. They have done, I think they have done, in the region. They haven't done as extensive in the space, but they can be quite sort of open about if they don't like a certain sector, they actually do the screening as well. But they acknowledge ESG is very important for long-term investment, so they discuss in their website. And also, if I can I remember one of the study we did with global investors. And GIC is actually a partner to the project, but it's in the public domain, so we can say it. So, yeah.
Right, please.
Sure. I just wanted to, if maybe I could refer to a couple of slides in my presentation, but just to clarify one aspect that you mentioned, that actually the ESG research, the environmental social governance ratings coverage of MSCI is actually covering over around 5,000 equities globally, including all large cap stocks on the MSCI World Index, which is developed markets, and all large cap stocks on the MSCI Emerging Markets Index. And then we've covered over 260,000 fixed income products as well with ESG ratings. And the reason why we've invested so much time in researching all of these companies and coming up with these ratings is exactly as Xinting mentioned. There's increased demand from investors for more transparency, for more ability to create tailored benchmarks to achieve their investment aims. And so really what we're doing is trying to service the real demand that's coming from the investor community for more transparency, more information about companies. And so as a company, if I was a company, I would like to know, what are my stakeholders asking for? They're asking for all types of different information, and how should I be reporting it? In some of the slides later on, I think this complements what you were saying about materiality. When we speak to some of our investor clients, when they see some of the charts like this, these are case studies of ESG environmental social governance event materiality. So direct impact on the stock price. So this is a recent example of Yum Brands, a very famous US company, but recently, at the end of last year, had a food safety scare in China. And if you follow environmental social governance issues in Asia, you know that food safety is very, very sensitive in China right now. And so when you show something like this to an investor, they say, obviously, the rating or the signal that the ESG rating provides indicates a vulnerability or a risk or greater propensity for volatility in the stock price because of some external issue. And I also wanted to mention some of the Thai companies that we've also historically covered. So we've also seen, with PTT Exploration and Production, we also rated its parent company a number of years ago and found that there was this vulnerability in relation to management of environmental risk. And I'm sure that that's very well known to the audience here, that this materialized at some point in a massive oil spill that then had
in 2009.
That's right. So this is historical. But what's interesting is that the ESG, environmental social governance ratings and research we're doing is forward-looking. It's an indicator of a vulnerability or a risk or an ability for a company to take an opportunity. And so what's very interesting is that once we see very big events like this, actually within about 12 to 18 months to 24 months later, you see some of the best policies and practices in place. So, things are always dynamic, they're always changing. And so there's always something good that comes out of some of these terrible events. As terrible as they are, some of the good things is that it actually raises the standards for the whole industry or for the whole country. Some of the other notable instances that we've seen in Thailand are, for example, a company like Siam Cement is now, reporting its carbon emissions year on year, demonstrating improved ability to reduce absolute emissions or to adapt to evolving carbon regulation in Thailand. We see a company like Siam Cement or Airports of Thailand, for example, they have some of the stronger health and safety records for not just for Thailand, but actually for the region. We're seeing companies like Central Patana Public Company Limited, one of the largest real estate developers and operators in Thailand, have some of the leading human capital management policies and practices in place, not just in Thailand, but actually globally, because we compare all of our companies to their global peers. So what we're trying to do is provide transparency not just to the regional market, but actually understand where that company is situated against a global peer set. And I think that that's important for companies to know where they stand globally, but also important for investors, because investors, as Xinting mentioned, they don't limit themselves to just one geography. They want to have exposure, they want to be involved in lots of different regions. So they need the research and the benchmarks to be comparable and consistent.
Right, I see. Let me turn to Kathelijne. Did I get your name right? Okay. I believe that RobecoSAM is the world's first investment company focused solely on sustainability investment. So, is that right information for to be one of the models that a lot of companies that would like to follow? And you also got the award from the Financial Times and International Finance Corporation in 2012. So please give a hand for Ms. Kathelijne and also the RobecoSAM. So let me ask you this. A lot of huge or large companies, listed companies especially, would have to comply with regulatory. And also, they have to deal with the consumer push as well. So maybe that's the reason why, they have to comply and they have to follow the sustainability investment. So if I were the smaller business owners or even the non-listed companies, do I need to care about this index, you think?
It'd be wrong for me to say no. Of course, I mean, the situation is different, but I think it was already mentioned before by Emily that, like you, we are also comparing on a global basis. And I think I mentioned it in my slides before, our generation has already got access to so much more information than ever before. That also means that investors are much more informed. If they have the choice between investing in a company which discloses particular information and the one who doesn't, I would imagine that they go for the one where they can better estimate what value they're going to get out of it, so the one that discloses more. Returning this to the assessment process, yes, I think it is relevant because we're increasingly competing globally. And I think emerging market companies can also be leaders. You gave some examples, Emily. We also have Itaú in Brazil, for example, in the financial sector, who is exceptional compared to even developed market peers. So I think they can also really set the standard. And I think seeing the situation in Korea develop, we've seen very rapid development over the last 5 years only. And I'm hopeful that a similar thing could also happen in Thailand. So I think for those companies who are not listed but who are interested, there are abilities to be measured. So we do assessments that are that for companies that are not considered for our indices but who still want to know where they stand. So you can pick your own peers, so to say, and say, okay, I'm a company Kathelijne and I want to be compared against Emily and Xinting, and then you can get that result. Also for smaller companies, I think that is actually the crucial point because it's the same at MSCI. The focus initially was always on the larger companies, but obviously in the current market circumstances, particularly these small up-and-coming companies that could really make it big. I mean, Facebook, etc., they all started very small until they were very big. So people want to get exposure to that. Investors, international investors want that exposure. So I see that as an area for the future. I think there is part of it is that it's difficult for those smaller companies to have the dedicated staff to really publish everything and pull together all the information. So that's why historically, I said, that's not been our key focus. But I think from an investor perspective, as soon as we get more coverage of that type of companies, it also becomes much more attractive for the investor.
What about in terms of the investors' perspective? Of course, the investors type like GPF or other pension funds, they would probably, interested in this kind of index because it's long-term perspective, right? But most of the investors, individual investors, mainstream investors, they would be interested only, medium or short-term, perhaps like weeks or months, and at most could be a year return on particular stocks or companies. Should we care about this?
Again, yes, of course. So that's the easy part of the answer. I think, again, it is difficult. I think that her investment horizon and the demand for return for many individuals as well as companies, that is still very short. And I see that particularly, again, in emerging markets, which I cannot blame. If you walk around Bangkok, the feeling, it's so dynamic compared to me walking around Zurich. I cannot blame people for wanting to see result. And you see result, yeah? In Zurich, it takes ages, I can tell you. So people want to see that outperformance. People want to see that result. And that is hard if you have a longer time perspective. But I think still going back to extractive sectors, for example, there are a lot of profits being made there at the moment, and possibly quite rightly so. But long term, we all know that those resources are finite. So it's going to run out at some point. So those profits are not sustainable. And I think we are all tempted at one point or another to consider something that may short-term be good for you, but long-term bad, yeah? Sweets, whatever you want to think about. So I think that is a challenge that we as individuals have, but that companies and investors have as well.
I see.
If I could just add on that,
Sure.
In terms of the investors' perspective, I actually have 2 slides on that. Slide, I think it's 8, 9, maybe. But a bit of background to that is, I think any research in this space will be useful to investors, even if they may not thinking of put a lot of money in industry investment because even with alpha investment, I think in terms of the actual the informative of the sustainability indices to responsible investors, how important ESG factors are. From what